gold going up and silver rising faster than gold, it's not very hard to get to the point where the gold-silver ratio is down to 40, where it's been multiple times historically. So let gold go to maybe $4,000 an ounce, which it could easily do in the not too distant future with the way the world is, and let the gold to silver ratio go down to 40, 50, something like that, where it's been multiple times in history. And then boom, $100 silver. So it's very easy mathematically to watch silver do these things and get us to $100 silver. Silver could get tighter for industrial reasons, and that could lead to the price going up.
Recent movements in the prices of gold and silver have captured the attention of investors, with analysts like John Rubino suggesting a bullish outlook for silver. Rubino points to factors such as the gold-silver ratio and industrial fundamentals, indicating a likelihood of higher silver prices shortly. He even suggests that if gold continues its upward trajectory, the possibility of silver reaching $100 per ounce is real. Silver's price showed advancement during Thursday's session, gaining nearly 1% and holding steady above the $24 mark, trading at $24.40 per ounce. Investors anticipate a rate cut by the Federal Reserve in June, contributing to silver's positive sentiment. Keith Neumeyer, CEO of First Majestic, a significant player in the silver industry, maintains his forecast of silver, surpassing the $100 per ounce mark. Nonetheless, he remains confident in silver's potential for triple-digit prices, citing its favorable ratio to gold mining as a key factor. Rubino's bullish stance on silver is supported by various factors, including increasing demand, supply constraints, historical price trends, and potential macroeconomic influences affecting gold prices. He highlights the existing deficit in the silver market, where demand surpasses production, and suggests that growing demand could lead to a shortage, resulting in price spikes. A recent report by the Silver Institute attempts to dissect the complex factors influencing the price of silver. It notes the unique position of silver as both a monetary metal and an investable asset, complicating supply-demand analysis. Unlike commodities like copper or palladium, silver's above-ground stocks of bullion and investment demand play a significant role in its pricing, akin to gold. This similarity to gold suggests that changes in ownership and investor sentiment toward silver could substantially impact its price dynamics. Join us as we explore John Rubino's insights. Stay updated by subscribing to our channel and activating notifications. Thank you.
For it. And solar power is playing a role in that process because that's a fairly new use for silver. 5 years ago, solar was not really a big factor in the silver market, but now it's up to about 1/12 of the silver that is taken out of mines each year. So that's a big new factor in what was already a tight market. The silver market is already in deficit. In other words, between industrial uses and investment demand, more silver is being demanded each year than comes out of the world's mines, and that comes from recycling. So we're already running through excess silver stocks that are sitting above ground right now, and those are going to be gone pretty soon. So if you get silver demand from solar going up, which it looks like it's going to, because the next generation of solar panels use more silver per panel than the existing generation, and demand for those next generation panels is spiking. It looks like it's going to grow dramatically over the next 5 years. So you get rising demand for silver from solar and other industrial uses and military uses, which are kind of black box. We don't know what that is, but we know it's a big number. And from investors who are more aggressively than in the past buying silver, then you run out of silver, and if that happens, the price spikes. That's just how commodities markets works. And we've seen that happen in a lot of other commodities over the last few years where there's a shortage, artificial or organic, and the price of the commodity just spikes. So with silver, that's easy to envision, and you don't really get demand destruction at slightly higher silver prices. In other words, solar panel manufacturers won't stop using silver until it gets up into the $50 to $100 range. And even then, that'll happen with a big lag, right? You don't just convert your production processes on a dime like that. So silver could get tighter for industrial reasons, and that could lead to the price going up. And then, with gold going up, You can also just look at the gold silver ratio because that's a historically, it's not stable. It's got a really wide range, but it does operate within that range. In other words, if gold gets too expensive, people start buying silver as the next best thing because it's relatively cheap. Well, we're in that kind of range again. I think the gold silver ratio is something like 85 right now, right? Maybe even 90. And that's usually the point at which silver starts going up faster than gold. So if you've got gold going up and silver rising faster than gold, it's not very hard to get to the point where the gold silver ratio is down to 40, where it's been multiple times historically. So let gold go to maybe $4,000 an ounce, which it could easily do in the not too distant future with the way the world is, and let the gold to silver ratio go down to 40, 50, something like that, where it's been multiple times in history. And then boom, $100 silver. So it's very easy mathematically to watch silver do these things and get us to $100 silver. And I think even if silver doesn't quite get to 100, we're still going to look at the silver price of 4 or 5 years from now and think, man, I should have loaded up at the 2004 price. And so I think this is a good time to be adding to silver, especially physical silver, where the premiums are not crazy. So you can buy good quality silver coins for $3, $4, $5 over spot, which you guys offer every once in a while as part of your sales. I think that's a good thing to be doing now.
Rubino presents a bullish outlook on gold, citing technical and fundamental factors driving its price upward and suggesting that current levels do not reflect its long-term value. The record run in gold prices continued this week as expectations of the U.S. Fed rate cut gained momentum after Jerome Powell's testimony before the U.S. Congress. Spot gold price settled at a record high on Friday after briefly topping the $2,200 mark. Concerns surrounding the global economic landscape, geopolitical uncertainties, and evolving expectations of earlier interest rate cuts have all contributed positively to gold prices. Let's get back to the interview.
There. And finally, gold broke through. And then the question was, well, would 2000 be the floor from now on, which would be great because especially if you, for instance, own a lot of gold mining stocks, the gold miners benefit from the perception that gold is going to stay above 2000 because then you can build in really robust cash flow projections for them and everything because they're getting a lot for the gold that they're selling. And that thesis is looking better and better lately because gold is now, like you said, it's up above 2100. So that means 2000 is looking more and more like a legit floor for gold. So even if it gets knocked back down right now, there's going to be a lot of buying coming in at 2000. And then gold will go back up. That's from a technical standpoint, a really positive thing too. So yeah, there are a lot of things happening that point towards higher gold in the future. And the biggest and most long-term one, of course, is that we're destroying the global financial system. And if you look at what the U.S. is doing, for instance, we had double-digit inflation in 2022. And since then, we've had kind of high interest rates, but then the government took over with massive deficit spending to keep interest rates from blowing up the economy. And so recently, we've been adding $1 trillion of debt every 100 days in the U.S., which is basically a kind of a death spiral statistic. When you're borrowing that kind of money and that kind of a time frame, that means you're headed towards that financial cliff at an accelerating rate. And that's very good for gold too. So, there's no way to know why it's up right now, other than to say that there's lots of good reasons for it to be up and lots of good reasons for it to keep on going up. Because really, 2100 is not any kind of a destination point for gold. Most of the guys who've run the numbers where they look at what gold price would be necessary to back the world's fiat currencies at a 40% ratio, they get humongous numbers. They get $10,000, $15,000 an ounce. And since we're heading for that kind of a currency reset, there is no reason to think that 2200 or 2500 or whatever is any kind of a terminal point. That's just a way station. There'll be fluctuations along the way, but gold is going to go much, much higher from here over time based on the horrendous mistakes that we're making in the US and around the world. Inflation led the Fed to raise interest rates, which caused the debt costs on the US national debt the interest costs on that debt to spike. So we're up around $1 trillion a year, just interest on the US national debt. But now that we're borrowing so much more money in order to keep the economy going, we're running these big deficits. All of that has an interest cost too. So in this year, in 2024, we're scheduled to issue $10 trillion of treasury paper. Now, 1.5 trillion of that is the deficit, which is borrowed money that we're going to have to pay interest on going forward. And the other 8.5 trillion is already existing debt that has to be rolled over at higher interest rates. So all this new debt being rolled over and taken on new at higher interest rates means the government's interest cost is going to spike again from here. So in the not too distant future, we're going to be at 1.5 trillion a year in interest, all of which has to be borrowed, and then interest has to be paid on that. So as it accelerates, you get closer and closer to the point where it just doesn't work anymore. So, are we right at that point? There's no way to know. Just like there was no way to know whether 5 years ago we were at the end point and things were going to break down.
The silver market has recently experienced significant developments, drawing the attention of investors as prices surged to a noteworthy milestone of $22.25, signaling a promising upward trend. As market observers closely monitor these movements, particular focus is placed on the resistance level of $22.70. This pivotal point serves as a critical juncture, determining whether the current bull run will persist or if there's potential for a price reversal. How do you envision the future trajectory of silver prices? Share your thoughts in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.